Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. We're going to take a look at the New Zealand versus US dollar. Today's date is July 8, 2024. What's the start of the new trading week done for this currency pair? Let's find out. In trading last week in the New Zealand versus US dollar, the initial move was to the downside. That move to the downside took the price back below the 100 and 200-day moving average. That's these converged blue and green lines right here. That should have led to lower levels, and indeed it did. But then the price started to rebound, and right here, you see how the price bottomed against the 100, the lower of those moving averages, the blue line right here, and started its rotation back to the upside. That moved to the upside, moved up to test the 200-bar moving average on the 4-hour chart. After a little correction, we closed higher on the week and near the highs out for the week right through here after the U.S. jobs report on Friday. Sent stocks higher in the dollar. The risk-on type of flows led to higher prices. In trading here today, the price of the New Zealand versus US dollar in the Asian session continued its move to the upside. And we moved up toward this swing area through here between the 0.6151 and 0.6159 level. It goes back to levels way back here where there's a number of different swing highs forming a ceiling there. Then that ceiling became a floor through here before rotating again back down to the downside, and was here that the market finally moved sharply to the downside. We returned back to that area through here, and admittedly it got a little choppy through this section right through here, but then reestablished the level as resistance through here. And it was in trading here today, the price moved back up to that swing area between, again, the 0.6151 and 0.6159 level. The price has since rotated back to the downside, and we are testing the 200-bar moving average on the 4-hour chart at 0.6127. If we move below that level and then subsequently the 100-bar moving average right here at 0.611103, then guess what? The buyers and sellers have defined their ranges, one being the 100 and 200-day moving average down here, the other being this swing area up here with 100 and 200-bar moving average on the 4-hour chart in between. Right now, if you're a buyer and you like this pair, you want to lean against this 200-bar moving average and hope that the price rotates back to the upside, eventually getting up to above the 59 level right through here, and continue its run to the upside, perhaps even to the high price that we saw a few weeks ago, or in the month of June, I guess, that the 0.62211 level. If you would rather see the price move lower because maybe you sold it in the swing area right here, this target area up here, you want to see the 200-bar moving average broken, followed by the 100-bar moving average on the downside. If it does that, then guess what? The sellers are more in control. So that's my look at the New Zealand versus U.S. dollar. The buyers and sellers are battling it out as in this consolidated trading range right through here. We'll see how it all resolves itself over the next day or so. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.